Apple just released its latest iPhone. The iPhone 15 features a brighter screen, a 48 megapixel camera and a titanium body. But the question is now a good time to buy Apple stock? Based on the current share price, Apple has a market cap of $2.76 trillion. It's got $28 billion of cash on the balance sheet, as well as $138 billion of investments. With $98 billion of long-term debt, the enterprise value is $2.69 trillion. Over the last 12 months, Apple has made $384 billion of revenue, $95 billion of net income and $101 billion of free cash flow. So Apple's stock is currently valued at 7 times revenue, 30 times earnings or 27 times free cash flow. And that PE ratio of 30 looks pretty high in comparison to the historical average. Looking over the last 10 years, Apple has grown its revenue on average 8.5% a year, and it's grown net income roughly 10% a year. If Apple keeps up that type of growth for the next 10 years, it will be earning roughly $250 billion of net income in 10 years' time. If you apply a 25 times multiple to that, Apple would be worth around $6.2 trillion by then, which works out to an investment return of 8.4% a year. Including dividends, it will be more like 9% a year. So the big question is whether Apple can maintain earnings growth in excess of 10%. If we look at the latest quarterly breakdown, you'll see that iPhone sales have fallen over the last 9 months by about $6 billion, almost 4%. And there was a clear lack of headline-grabbing updates in Apple's latest event. Apple is being forced by the EU to drop its Lightning charging port, but the phone itself is not much different from previous versions. Convincing customers to upgrade to this latest model isn't going to be easy in the current economy, and that could further pressure sales. Turning to the geographic breakdown, you'll see that roughly 20% of revenue comes from China, and this poses another risk for Apple. Beijing recently said that no government employees should use iPhones at work. Trade disputes between China and the US could hurt sales in China as well as damaging Apple's manufacturing partnerships. That said, Apple might be able to offset this decline with growth in India. According to the New York Times, Apple's sales in India have climbed from 1% in 2019 to 5% today, and they could double to 10% next year. So Apple no doubt has more growth ahead of it, and you can't argue with the company's current financial position. However, at 30 times earnings, the risk from China and the prospect of falling iPhone sales due to a lack of updates doesn't appear to be priced in. Apple may prove to be a good investment long term, but there are short term risks to be aware of. That's why I currently give the stock a neutral rating, but these are my personal opinions, not financial advice, and I've got no position in Apple stock. For more detailed investing ideas, make sure to visit our website, overlookedalpha.com.